how to determine the cost of capital. Determination of cost of capital will vary from the source to source. And what are the sources of capital that we can have in any business? So the first source that we can have in the business is cost of equity. Second source that we can have in business is the reserves and surplus. Third source that we can have in the business is preferential capital. Fourth source that we can have in the business is debt capital, and debt of course can be in different forms. It can be in the form of a term loan, it can be in the form of a deposit, it can be in the form of a debenture, it can be in the form of a bond. So ultimately the form may be different, but it is nothing but a debt. So the source number 4 is debt. And finally, what we have the combined cost of all of them, and that is known as your weighted average cost of capital. So let's look at them one by one as to how do we find cost of different sources. So as far as the preferential capital is concerned, how do we determine the cost of preferential capital? I'm sure all of you will know this. So whenever a company will issue the preferential capital, at the very beginning they will say 7% preferential capital or 8% preferential capital or 10% preferential capital. So whatever is this 7%, 8% or 10% which is mentioned as a prefix to the title of the preferential capital, that indicates the rate of dividend that is to be paid on those preferential capital. So this rate of dividend of 7%, 8%, 10%, as the case may be, is nothing but cost of the preferential capital. And this is how you will determine the cost of capital, and that is source number 1. Source number 2, how do you determine the cost of debt? Cost of debt, as we discussed a little while ago, cost of debt, remember, is to be number 1. So whenever you will have a debt, you will have it in case of debt also a rate of interest. So debt may have a rate of interest of 10%, 15%, 12%, will vary from case to case. So take up the rate of interest which is applicable in case of that debt. And then what you have to do, you have to adjust this rate of interest by the saving of tax. And the saving of tax is going to be equal to the is going to be based on the rate of tax. So for example, in the given case, rate of interest is 10% and the tax rate is 30%. It means what? It means because you are paying interest on this debt, you are going to save tax which is equal to 30%. So your saving of tax is going to be 30% of 10%, and that is 3%. Meaning what? Meaning you are paying interest at the rate of 10%, you are saving tax at the rate of 3%. So therefore your effective cost of debt is 7%. And that is how you will determine the cost of debt. Now, number 3 is cost of equity. How do we determine the cost of equity? I think we have discussed it so many times in detail. And the bottom line is, for finding out the cost of equity, you will use a model which is known as CAPM, Capital Asset Pricing Model. हमने थोड़ी देर पहले ही डिस्कस किया कि क्या CAPM model gives you the accurate cost of equity, and the answer is it does not give you the accurate cost of equity, because for you to confirm that the cost of equity computed as per the CAPM model is accurate cost of equity, उसके लिए आपको मालूम होना चाहिए कि cost of equity क्या है. और अगर आपको मालूम है कि cost of equity क्या है, तो फिर आपको CAPM की यूज़ करने की ज़रूरत नहीं है, क्योंकि आप तो पहले से जानते हैं कि cost of equity क्या है. So CAPM does not give you what is the accurate cost of equity. CAPM gives you a cost of equity which can be considered to be most authentic, reliable, dependable cost of equity. So for the cost of equity, you will use the CAPM model. Now, how will you determine the cost of reserves and surplus? So आपके capital structure में you will also have reserves and surplus. How will you determine the cost of reserves and surplus? Answer of course is very simple. And what the answer is, cost of reserves and surplus is same as cost of equity. तो जो रिजर्व्स एंड सरप्लस हैं उनकी कॉस्ट वही है जो equity की कॉस्ट है. And why is that so? That is because equity belongs to whom? Shareholders. Reserves and surplus belong to whom? Shareholders. If both the monies belong to the shareholders, can the cost of these two sources of capital be different? And the answer is no. So whatever is the cost of equity, that is the cost of reserves and surplus also. So this is how, friends, you will find out the cost of equity, cost of reserves and surplus, cost of preference share capital, and cost of debt. And how will you find out the WACC, or weighted average cost of capital, or cost of capital employed? I think we have discussed this 2-3 times earlier. And weighted average cost of capital is nothing but the cost of all the sources of capital that you have in your capital structure based on the weights, and the weights are linked with the portion of that particular source in your capital structure. So friends, this is how you will determine cost of capital of different sources and find out as to what is your cost of capital is, what your cost of equity is, and what your cost of weighted average capital is.